I've got an important market update to give you, and let's hit the charts. So we've got the S&P 500. It came up, and if you haven't seen the warning, go check it out on my channel. We came up, we hit the 618 retrace of the whole move down. We came back down, we bounced off this 618 level, retraced up, hit another 618 of that move up, and now we're moving down again. On Thursday, I put out in my Discord channel this right here, a support zone down here and a resistance zone up here. And just one day later, on Friday, we came down right in the lower oval, and we bounced around in there all day. I've drawn this box right here, this purple box. If we break down below this week, back below 3860 area right here, we can see a lower low, 3400. That's easy. Another thing, if we draw head and shoulders right here, we're already breaking the neckline on this head and shoulders. If we take and we put an arrow on here and we project that down, that takes us right down this 3500 level, right down here, 3500. So if you aren't prepared for a move down to 3500, you need to be prepared for that. If we break out above 4050 in the next week or so, it doesn't matter if we push and then suddenly rally, whatever. If we break out above 4050, we're looking at 4700 up here on the S&P 500. 4700. Big event this week coming up, FOMC. Jerome Powell and his cronies, they've got a meeting starting on Tuesday. They're going to wrap it up on Wednesday, and they're going to announce the next rate change, whether it's 3/4 point, half point surprise that can be super bullish, or what's favoring now, a 1 point raise, which the reaction all week after the CPI print came out, down. Everybody's expecting a 1+% raise. The thing to keep in mind is this interest rate chart right here. If we look back, the 99 financial crisis, see the Fed funds rate in orange right here, it came up and it crossed the true market rate. We went flat for a few months and then all broke loose. Again, in 2008, we came up, Fed funds rate crossed the market rate, flat for a little bit, and broke down. Again, in 2018, they were talking about raising rates and blah, 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 went sideways a little bit, and we had a little market freak out. Now, here we are again, rate raising. It's going to take 1.5 points just to catch the market rate. At the point where these two invert, where the orange Fed funds rate goes above the market rate, whenever that happens, we'll probably go sideways, we'll coast for a little while, and then all is going to break loose. We're going to go down in a blaze of glory. The next financial crisis, it's coming. I want everybody to be aware. Now here's an interesting one. I turned on my roadmap line. If you want more information on the roadmap line, go check out the video. I'm going to link up here. We've come down and we did the classic roadmap bounce, where we come up, we retrace down, and we hit the roadmap line. This is short VIX. And VIX is a volatility index. It's a ratio of put and calls on the S&P 500. This is potentially going higher, which means VIX is going lower potentially, and VIX is the volatility index. Lower volatility usually means the stock market is rallying. So this is a positive sign in the market and could support us seeing a major bounce this week. You know what? If you have an idea where you think the market is going to go next, make sure you jump down in the comments and let me know. Give me what you're thinking, what kind of fears, what kind of excitement you got, and let me know so I can address it in my next video. Now, another thing I saw that got my attention, I canceled a session I had on Saturday because of this. We had a ginormous put buy in the market by big hedge fund type people. This is 3 times more extreme than 2008. It was about $8 billion in put buy that was matched with about a $1 billion call buy. So that was 8 to 1, and the VIX did not budge hardly. This is extreme levels of hedging, and this can lead to a mother of all short squeezes, like an irrational run in the market that makes no sense at all. It goes to a new all-time high. It won't make any sense. All the economic indicators will be bad, but we could see this massive run higher that will not make any sense, and that could lead us into a bigger crash when those interest rates invert. And the last time we saw those interest rates, they took about 112 days, almost 4 months before they really took a dive. We could go up there, we could kind of go flat for about 4 months, and then all economic heck could break loose. Hit the like, hit the subscribe, make sure you hit the bell for notifications. I go live every Tuesday at 5 p.m. and you don't want to miss my next update. I got lots of stuff to talk about. I'll see ya.